Hey there, traders, and welcome back for episode number 107 from the StockBandit.tv. Hope your weekend's been great, and it's time to take a look once again at the major averages as we head into a brand new week of trading. Last week was definitely an interesting one. We definitely have not seen much downside in this market over the course of the past 7 months. We bottomed out in March, and the climb since then has been very consistent. Minor dips along the way have been bought. We've seen very little downside follow through, and so to see a little bit more recently, from the previous Friday, which is where we topped out in the NASDAQ 2190, and through Friday of this past week, obviously we have corrected significantly. So for the NASDAQ, just last week alone, it did give back 5%. It's also now down 6.8% from the peak. So that is a pretty hefty correction just over the course of the past 5 days, 6 days. And also take a look here at the volume. We're seeing all of the volume spikes are on down days. And take a look here. We've got very minor upside volume spikes. I should say upside volume has been incredibly weak, and so it makes it a really, really tough market to be trusting the long side at this moment. The trend is still up. We still have higher lows in place, and yet it seems as though this market has undergone a little bit of a character change. So for the NASDAQ, we are now leaning right on this October low, which is the 2040 level, and I've pointed that out here before. We did tag that number right on the nose on Friday, and we bounced a few points off of the worst levels of the day to finish at 2045. But that is an all-important level only because if we do undercut that, we would then have our first lower low. Okay, so we've got higher lows in place. Every time we dip, it's to a higher level, and every time we rally, it's to a higher level as well. So we've got higher highs and higher lows still in place until we break 2040, which would of course mark a lower low. So that's going to be on the radar of many traders in the coming days, and it's definitely going to be front and center for me. By the way, for the NASDAQ, if we do undercut that level, the next spot I would expect this index to see is right in here. This is about the 1960 area. It definitely has room to fall farther, despite the fact that it is somewhat short-term oversold. We could stay oversold and continue drifting lower, but it's something that we want to be aware of and don't really want to start initiating a lot of short sales here until we see a little bit more consolidation or some kind of a bounce. For the S&P 500, last week we saw this index give up 4%. It is now through this uptrend line here that extends all the way back to March. We did break that last week, and we've finished well below it now. And so the next stop for the S&P is the October low, which is right in here. That's the 1019 area. And this index currently stands about 6% off of its high set earlier this month, and so this is a notable pullback. And here again, zooming in on the chart so you can see what I'm pointing out. In recent days, the volume spikes have been on downside days. So last week, for example, we saw harsh sell-off with a spike in volume. We saw Thursday, this thing reversed and completely erased Wednesday's downside, but it did it on weaker volume, you'll see. And then on Friday, we sold off sharply once again on expanded volume. So volume is another thing to pay very close attention to here. One thing is for sure, though, we are seeing a pickup in volatility, and that's a great thing for us as traders. For the Dow Jones Industrial Average, zooming out a little bit here, I'm still watching this uptrend line that extends all the way back to the March low. Was validated back in July, and we have yet to even test this for the Dow. This index has been climbing at a little bit more gradual pace as compared to the NASDAQ and S&P, so has not made quite the progress on a percentage basis that those others have. But for now, if this thing does continue heading lower, that uptrend line would be met at the 95.80 area, and then below that is the October low, which is the 94.30 zone. So there's a couple of downside levels to keep an eye on if we do happen to see this short-term weakness continue in the week ahead. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.